Hello everyone, today is Monday, January 19th, 2026 Eastern Time. Welcome to Panda Finance. Let's take a look at the top 10 global corporate news stories from the past week. Here are the details. Alphabet joins the $4 trillion club. Alphabet, the parent company of Google, has officially crossed the $4 trillion market capitalization threshold, becoming the fourth company globally to reach that milestone. Shares rose 1% on January 12 after Apple said it would adopt Google's Gemini as the foundational artificial intelligence model powering the next generation of Siri. The move places the search giant alongside Nvidia, Microsoft, and Apple in the elite $4 trillion cohort. Nvidia and Microsoft first breached the threshold in July 2025, while Apple followed in October. Since then, however, both Apple and Microsoft have slipped back below the $4 trillion mark. Trump imposes 25% levy on Nvidia artificial intelligence processors. U.S. President Donald Trump announced new tariffs on artificial intelligence processors produced by Nvidia and Advanced Micro Devices, formalizing a policy that extracts 25% of revenue from sales of such chips to China. The measures follow a December White House decision allowing Nvidia to resume exports of its H200 processors to China, reversing a prior ban on advanced artificial intelligence hardware. The approval, however, was contingent on revenue sharing with the U.S. government. Officials said the newly announced chip-specific tariffs are intended to enforce that arrangement and shield it from potential legal challenges. Tesla to offer full self-driving only through monthly subscriptions. Tesla chief executive Elon Musk said the company will stop selling its full self-driving software as a one-time purchase, shifting entirely to a monthly subscription model. The subscription will start at $99 per month, replacing the previous $8,000 upfront option. Musk is pushing to position Tesla as a leader in autonomous mobility, with full self-driving seen as a central pillar of the company's long-term strategy. Boeing overtakes Airbus in annual orders for the first time in a decade. Boeing secured more aircraft orders than European rival Airbus in 2025, marking the first time in 10 years that the U.S. manufacturer has outperformed its competitor on this metric. After accounting for cancellations and conversions, Boeing reported net orders of 1,075 aircraft, compared with 1,000 for Airbus. The company's order backlog rose to 6,130 planes by the end of December, up from 6,019 a month earlier. Boeing was also buoyed by progress on its 737 MAX program and delivered 600 commercial aircraft in 2025, its highest annual total since 2018. Trump's push for investment in Venezuela draws cautious response. President Trump urged executives from more than 20 oil companies to expand operations in Venezuela, home to the world's largest proven oil reserves, but the appeal was met with limited enthusiasm. Less than a week after U.S. forces entered the country, executives from Chevron, ExxonMobil, ConocoPhillips and other firms met at the White House and expressed interest in evaluating new opportunities. Still, they stressed that meaningful investment would require security guarantees and sweeping reforms to Venezuela's legal and commercial framework. Alibaba integrates Qwen into its consumer ecosystem. Alibaba Group is rolling out a major update to its Qwen application, embedding the chatbot deeply into the company's consumer ecosystem and enabling it to execute tasks on users' behalf. Following the update, users can ask Qwen to order drinks, book flights, and complete other transactions without navigating separate applications. The system has been integrated with core platforms such as Taobao and online travel agency Fliggy, allowing transactions to be completed entirely within Qwen. For now, the functionality is limited to food delivery services. Huawei reclaims top spot in China's smartphone market. Huawei regained the top position in China's smartphone market in 2025, according to data from International Data Corporation. Total shipments in China fell 0.6% to 285 million units. Huawei shipped 46.7 million phones, down 1.9% year-over-year, capturing a 16.4% market share. Apple followed closely with 46.2 million units, up 4%, while Vivo, Xiaomi, and Oppo rounded out the top 5. Fourth quarter shipments totaled roughly 75.8 million units, down 0.8% from a year earlier. ChangXin memory emerges as a global challenger in storage chips. ChangXin Memory Technologies, a leading Chinese memory chip maker, is preparing a roughly $4 billion equity offering as demand from artificial intelligence applications drives up storage chip prices. The deal would rank among the largest initial public offerings by a chip manufacturer this century. Despite U.S. efforts to curb China's semiconductor ambitions, ChangXin has emerged as a credible challenger to Micron Technology and South Korea's leading memory producers. Surging demand from artificial intelligence data centers has diverted capacity away from consumer electronics, contributing to higher prices for U.S. buyers. China's vehicle exports approached 7.1 million units in 2025. China sold a record 34.4 million vehicles in 2025, including exports, up 9.4% from the previous year, according to the China Association of Automobile Manufacturers. New energy vehicle sales rose 28.2% to 16.49 million units, accounting for nearly half of total sales. Battery electric vehicle sales jumped 37.6%, while plug-in hybrid sales increased 14%. Exports surged 21.1% to nearly 7.1 million vehicles, and domestic brands captured 69.5% of passenger vehicle sales, up more than 4 percentage points from 2024. Major cities follow a reputational crisis triggered last year by controversy surrounding prepared food products promoted by live streamer Luo Yanghao. While customer traffic has rebounded after discounts, vouchers, and wage increases for frontline staff, profitability has deteriorated. Founder Jia Guolong said all affected employees will receive full compensation, and the closures will be completed during the first quarter. Thank you for tuning in to today's financial news. We look forward to seeing you again.